That actually makes me wonder about some of your thoughts around AI, because I think there's a lot of competing philosophies around that right now, and certainly all the buzz. And I believe it's deserving, by the way. I think the AI revolution is truly transformational, and I do think it's going to transform a lot of things in a lot of industries. Lending is one of the most far behind industries, actually, in terms of technology, and it's just right for AI innovation. But what do you think AI is going to do for our industry? How do you see AI playing a factor? And of course, the scary question is like, should I be scared of it?
Yeah. So I think two areas of the industry separately that it already is having an impact and will increase over time. Look, I think on the broker side, if you're not implementing AI or AI tools today, you will get left behind. It's inevitable, right? You've got banks that have, really sophisticated chatbots. They're available 24/7. They can provide a lot of information to customers as they're going through that underwriting journey. So understanding how to use AI for faster underwriting, faster processing speeds that again lead to better customer service experience, I think is mandatory. If either you're not implementing it or you're not part of a network that has the technology that's providing it to you, then you should really kind of think about where you are and what your future looks like. So that's kind of on the broker customer side. I agree with you that on the lending side, it's going to completely change the game, right? As you know, faster adjudication, more risk profiling, not just pre-funding, but post-funding as well. I think if I had to sum it up, today lenders are pricing, as you know, probably better than me, the lenders are pricing everything in a box, right? There's a GDS, TDS, and there's a credit score. And if you're in that box, you get the same price, right? For the most part.
Mm-hmm.
I see the future of lender pricing similar to how insurance companies are pricing your car insurance. You put a tracker on your car, and based on how aggressive you are, how sharply you take a turn, how much you speed, how slow you go on the highway, they're adjusting their pricing as a result of that. I think mortgage pricing is going to get to that point. So it's not just going to be GDS, TDS, and credit score. I think it's going to be your repayment history, how long, or how fast, or where in your credit score. Are you over 800? Because today anything above 680 is priced the same way.
Yeah.
But if you're at 800, 800 is different than 680. So I think that pricing is even going to get adjusted with AI, even more deep than it is today, which as it should.
That's a great answer. I think about that quite often. I mean, even as a consumer, if they were to find out that the 800 score gets the same rate as the 680 score and they've never been late on their mortgage, they keep 6 months of reserves for their mortgage payment in their bank account, and they made all the right decisions, and they've got all this history and it's robust, and they pay their credit cards in full every single month. They do all these things. Like, I'm clearly less risk, right, than this person. Why shouldn't that be passed forward in pricing? It's not that foreign to me. That is how it is based in the US. The US is much closer to that model, although there's still some opportunities, but they have much tighter pricing windows that are risk-based. And I think with the advancements in technology, it only makes sense that these risk scoring models are going to get better. Personal lending actually is ahead of us in that space. Even the alt lending space in our world is very much that today, right? Like, it's like, hey, what's the rate going to be? I don't know, maybe 6, maybe 8. Let me take a look. I'll let you know. Now, it's very manual, but I think there's a future in which technology is the decider of that. And also, I think that removes any potential biases of an individual human sitting on the other side of that to say, hey, this is not personal. And I think there's going to have to be some risk guards put in place in that. But ultimately, they're going to take a full profile of data that goes beyond just a credit bureau and goes beyond just the GDS, TDS, and they're going to package all this data, and it's going to tell you about the delinquency rate of those clients.
I'd almost love to see lenders having more of a matrix on how they pay commissions to brokers based on speed and efficiency as well. So there are efficiency bonuses today. A lot of lenders use that, but why pay a broker the same amount of compensation if it takes them a month to close that deal versus a week, right? They all have operational expenses, body count is, a big OPEX on their expense line. So if they could just process more files faster with a certain broker than another, there should be some kind of beneficial interest for that speed. So there's a lot of ways that this could will disrupt the space.
I like that as a pitch.
Yeah.
Like, hey, my pull through is higher than others. I'm clearing my files faster. You have to do significantly less work on everything that I send over. How do you pass that back to me in price? And how do we build on this partnership and get everybody aligned to just be better, right? Because some of the bad actors will just slow you down as a lender. For sure.
Exactly.
That's slowing you down, right? Now you're playing in the same field as the brokers who are not efficient, who are not doing the right things, who are not getting you some of the documents that you need as a lender, and then everybody shares in that price.
Yeah, no, agreed. I think it will literally weed out kind of not just the bad actors, but the inefficient actors, the slow actors, the stuff that really bogs down the industry, the stuff that requires FISRA to do more work and keep our licensing fees high. I think we become a lot more efficient, and a lot more cost cutting can be passed on to us who bear a lot of that burden as a result of using AI properly.